Hey, not bad, not bad.
Haven't seen you in a while. You've been traveling, working. What's happening, man?
Not much, man. Just kind of taking a little break.
Yeah.
Yeah, that's about
Oh,
it. But back in the game now.
awesome, awesome. Welcome
Yeah.
back.
Thank you. Thank you. Hey, happy birthday, by the way.
Oh, thank you. Thank you. Yeah. Gotta take it easy. Actually, I'm planning to cut out early here and go do something.
Yeah, you
So
should. You should.
yeah.
It's your special day. What are you, 30? Turning 30?
Yeah, 30, 31, I think. Yep.
That's
So
awesome. That's awesome. Well, make sure you get out there and really enjoy it.
yeah, that is the plan. The plan. Yeah, yesterday was an interesting day with that S&P running up nonstop. I mean, we first 1 hour in the morning it was kind of sluggish, thought it was going to go down, then it covered the gap and just kept running up. So yeah, a lot of people got stuck in that CCS.
I'm sure
Yeah,
it'd be nice to be able to ride one of
write
those
it up.
waves all the way up. Yeah.
All right. You found your
So I
strikes
was,
there, Heather? Okay.
yes, it was 43.10, 43.15.
Mm-hmm.
And then the first few minutes of the morning, I was
Yeah.
fine. I had a little bit of profit, maybe I would say 30%. And
Yeah.
then it just went the opposite direction.
Yeah. So yeah, it might I don't know. You said you got about 7 days on it?
Yeah, I got bought a 7 DTE on Thursday,
Mm-hmm.
so which means I really just have 5 days to trade it. I
Yeah.
didn't wasn't able to close it, so I wasn't able to do it yesterday. So I think I have Monday, Tuesday, Wednesday, and Thursday, although I don't want to wait till the
Right.
last minute.
Understood. Understood. Okay. So yeah, with those multi-day credit spreads, those are a little dangerous because uh this thing unless you have a really sure, thesis that it's going to go one way or another or stay in a particular direction. I like shorter DTEs. I'd rather do maybe two or three.
Oh, really?
Yes, yeah. If you're going to do, see the problem with seven and DTE, 10 DTE, and all that is first and foremost that premium does not decay.
Mm.
Yeah, the premium just stays stagnant. Nothing's happening because the risk is not yet defined. But,
Oh,
but once you start defining the risk, then it will either do its thing. It will either hold it very well or it will decay very quickly. So the longer the DTE for credit spread, anytime you're collecting premium,
mm-hmm.
then the longer it's going to take to decay. But the shorter the DTE, that is a whole thesis about credit spreads. We go with zero because we know it has to go down to zero, right?
Right.
It's got 6.5 hours to do that. Obviously, the trick is figuring out the direction. So, what kind of stop loss do you have on that?
So I know you're going to get mad at me, but I
So,
know, I know, I know, I know. Okay, so this is my concept. I
yeah,
thought if it's 7 day, I didn't want to get stopped out. I figured because I'm going to trade it, I want to close it out in the morning. I'm
yeah,
going to be physically sitting there. I don't have to go
okay,
to work till later in the day. So I'm going to sit there,
right.
close it out before I go to work and
Oh,
solve the problem. And I don't get closed out because the previous week I was
yeah.
setting stop losses and I would get stopped out
And then they'd
within
come
the
back and
first
do
20,
well.
30 minutes. And
Hmm.
I lost my three chances.
Uh,
So
yeah. So, if you were to set a stop loss, what would it be?
um I was going to do double the amount of my
Okay. Twice
premium.
the amount you received. Okay.
Yeah, two
I
X.
okay. And are you a double right now? Are you less than double? What's the deal?
Well, this past one that I
Mhm.
was in, I didn't set one because I
Okay.
thought I was just going to.
Okay,
Close it out.
the
Well,
one
there's
that's
not one on it
7DT.
right now.
So yes, so this one that's still active.
Yeah.
But you said it's negative at the moment. Is it twice already? Has it hit that point or not yet?
Oh, hold on a second. Let me go check real quick.
Oh, okay, sure. Yeah.
Is it a little safer to do the 2 to 3?
Then the 7, yeah.
I mean,
Yeah.
than even the 0.
I would no, not no. I would say that if you're going to do a credit spread, especially on SPX, you want to do 0 DTE. 0. I don't even do 1 DTE on them.
Mm.
Yeah, because the whole premise is that the K will happen that day. Actually, within an hour is usually what I'm looking for. If I'm inside of a credit spread for more than an hour or 2 hours, I'm looking for ways to get out. Yeah, because it's not the kind of trade that's designed to be to be held for a very long time. You want to hold it for as short a time as possible. Yeah. Yeah.
Oh, sorry, go ahead.
No, it's all right, Heather.
Oh, okay. So I switched over to a new platform, Tasty Trade. I'm still kind of getting used to it. So
Okay.
I'm in my positions.
Yeah.
And it has profit and loss day for my the one I sold and the one I bought.
Yeah.
And it has bid, ask, IVR, and a bunch of characters. I'm not sure what that means. So can I give you the I'm not sure, the ask, the bid and the ask for each one?
Well, let me catch up with you here. You said you are on Tasty Trade, right?
Yes. And
Okay.
this is a new platform for me.
Yeah. Okay. So I like Tasty Trade. Tasty Trade is it's an okay platform. It's good. And
I had been working on Think or Swim since I've been in trade and travel for several months, but I wasn't able to get to level 2 of the options. They didn't approve me for level 2. They just approved me for level 1 margin.
yep,
So that's why I went to Tasty Trade so I could do verticals.
got it.
So in the positions tab, okay, so I have profit and loss day, ETF. I'm not really sure what that means. Bid, ask, IVR,
Trade percent.
trade percent, and days open.
Okay. So your PL, not PL day, that's not what you want. You actually want to add another column for, let's see whether they have PL open. Yeah, PL open.
PL open? Oh,
Mhm.
hold on, let me see if I can add that.
Yeah.
PL open.
So this is probably what you're looking at here on Tasty Trade. So at the top right, notice that small the cogwheel over here.
You're not sharing any.
Oh, I'm not. Oh, I thought I was. Sorry. Where's my zoom? Zoom and all right. This is what I'm looking at over here for. Move this out of the way. So Heather, can you see this?
Yes.
Okay. So you're on the positions tab right here, and
Yes,
if
I'm
you
in positions.
and then on the very right side where it says where was this cogwheel, you just click on that, and then under positions, if you're not seeing the PL open, for example, these, you just simply see where it says not displayed.
Uh-huh.
So you look for your PL open,
Okay.
and you just simply click on it, and it's going to move over to this side.
PL open.
Yep. So PL open for me is going to be just I think well, I just clicked on it a second ago.
Okay.
Yeah.
All right. And then do I have to just hit?
Yeah, just hit OK after that.
Okay.
So
All right.
PL.
Okay. I got my PL open now.
Yep. So now PL open should tell you exactly, what you're doing or not doing.
Okay. So when I spin down SPX, I have two trades open. So I have they have a price under PL open for both the one I sold and the one I bought in the spread.
Okay. They don't have an aggregate on that?
I mean, at the very top, but I think that's for a combination of the two different ones that I have open, I think.
Okay. Yep. So yeah, well,
Right
I guess
now, my aggregate is minus $95.
okay, so that's how much you're down for those two positions, the one that you bought and the one that you closed. It's just one spread, right?
I have two spreads because
Okay.
I have what I was trying to do. This is a new concept. I was going to try it out for a week. I was going to buy one 7 DTE spread each day and close it the next day. So if I buy one on Monday, close it on Tuesday, buy one on Tuesday, close it on Wednesday. That was that was the idea I was thinking.
Well, it's a good idea if it decays, quickly enough. The only caveat on that is, will it have decayed enough? It would work for you very, very well if the direction of the stock were to, go your way, right? So if we were to look at, S&P and see that it's consistently going up, then a PCS would do very well for you, right? And there is, I think I'm familiar with the strategy that you're talking about, where they do actually 45 days, 45 DTE spreads. And generally, those will be in one particular direction. So you might find them, if like, for example, in this period over here, if you were doing PCSs, then that would work very well for you. Now that we're starting to go up, a PCS obviously would be the right thing. CCS not so much, because we've hit support, really hard, and now it's turning around. So I'm curious, actually, why you chose a CCS instead of a PCS. I mean, did you think it was going to continue downwards? Is that what you thought?
I thought that. I think I don't have a good system for indicators used to determine which direction, because it worked for the first maybe 10 minutes.
Yeah. Well,
10,
on a 15-minute
15
chart, yeah, you can see, big difference. It's just that yesterday was kind of an outlier. For several days there, we were, we're rolling kind of in one spot, and then all of a sudden it shoots up.
Exactly. I was trying to follow what I guess would be the trend. The trend was, kind of bearish. So I thought, oh, okay, I should get a call. And then I feel like I need to use some better indicators.
Yeah. Yep. Well, the best indicator that you can use is really the chart, the daily chart, that will help you, determine that trend. So cool. All right. Anything else you're trying apart from those spreads? Are you doing calls, puts, anything like that?
I was trying to focus on just finding a way where I could trade each day because I have a small account. So I was going to try that, and then I also wanted to try the box spread, but I couldn't quite figure out how that works. Like the box spread where you do a vertical, like say for example, if I did a call vertical out of the money, do a put vertical
So an iron condor, basically, that's what it's called. Yeah,
What's that?
that's an iron condor. That's some people call it box spreads, which I believe the thesis is that you're expecting price to stay in between the two spreads.
Oh, no, not an iron condor. I've done iron condors before.
Okay, so this is different.
Yeah, when markets consolidating,
Mm-hmm.
and I've gotten some wins from that. A box spread I haven't tried before because I couldn't quite figure out how to set the price on the basically like if I do a 40 43 10
Mm-hmm.
43 15 call out of the money, I do a 43 10 43 15 put in the money, like exact opposite in the money, and somehow it's supposed to magically cancel out and you get a profit, but I haven't figured out how to put in the like how do I calculate the prices for the in the money
Got it.
put. So yeah, so I heard that's called a box spread, or on the YouTube it's called the PDT hack. So because you can supposedly do that every day because you're basically opening
Yeah,
you're opening two trades in one day, so they cancel each other out, you still end up profit and you never close anything, so somehow you get a profit at the end of the day.
understood. Yeah, so I'm very familiar with that, and it does help you avoid the PDT. Obviously, both of those you're normally going to do it one after the other, not both at the same time.
Okay, so do the open.
Yeah, the sell to open, and then to close it, you just simply sell again, but this time on the opposite side. So I, for one, I'm not a big fan of it.
Oh, really?
Yeah, I'm not a big fan of it because it's a loophole that could, once they close that loophole, then it will become an invalid trade, and then you'd be stuck with, either an untenable, situation, or they just ding you with a PDT. So, yeah, because the opposite, the closing side has to be, it has to close at exactly the price that you wanted. So if, for example, if you collect, 85 cents on the opening, then you're trying to close the other one at $4.15. Exactly.
Oh, okay. Okay.
Yeah, not any other amount. It has to be at 4.15. They have to balance out. So I don't even teach people how to do that. I know how to do it, but I just think it's a kind of an odd way. If you're going to, I would rather just do the spread one way, let it close, or close it myself, because remember, if the opposite side does not sell, right? Think about that. If the opposite side does not sell, then the one that you sold to open in the first place is still open all the way to the end of the day, right?
Yeah, you have to wait till the end of the day. Yeah.
And if you, for example, sold it for 85 cents, and the closing one that you're going to sell to negate the very first one, if it does not sell, then your exposure is $4.15. That's a huge risk. So 4.15, depending on how many spreads that you did, say you just did 5, you're talking about a net loss of about $2,075.
Oh, yeah, no. Okay. That's good thing I didn't try that.
So it depends on the second one to close it, being actually filled. The condition has to be right. If it does not get filled, and you end up with the one spread that you are refusing to close because you don't want the PDT to go against you, then you end up losing that $2,075. Bad deal.
Yeah. Okay. All right. So I just need to refine my 0 DTE and multi DTE.
Yep. Yeah, I'm familiar with the multi. That's the ladder. They call it the ladder approach. Is that what where you learned it?
Oh, I didn't know that's what it was called.
It is a ladder. Yeah.
Okay.
A long time ago, I used to teach that.
Mm-hmm.
I taught that maybe a year or a year and a half ago, the ladder approach. But at that time, the S&P was actually very, very, it behaved very well. Yeah.
Mhm.
It was doing what S&P does, which is normally go up, 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 down a few times and then continues going up. Very, very predictable on the longer horizon until we hit that 2022 patch where things just went down and down and down. And every time we think it's going to go back up, it goes down again.
Mm.
So that ladder approach became untenable. So these strategies that we do are usually good for a little while, and then you have to keep changing.
Yeah.
You do have to keep. You can't just be stuck on one. So,
What would you recommend is the best strategy for the S&P, for the market the way it is currently? Because I feel like I think I know
mhm.
direction the market's going to go, and it goes the opposite, and I'm just like barely
Yeah.
getting
So
out.
yeah, usually when we know where price is not going to go, we sell premium. Yeah.
Yeah.
We sell premium. So that's what I've been doing recently, because especially when it's consolidating, there's just not enough movement in there for me to do day trading using
Mm.
calls and puts. Because every time I, put my finger to go buy a call, it changes direction. Then it changes direction, and those movements are not enough. There's a particular number that I'm looking for in terms of movement
Mhm.
consistently that I think it's going to go there, and I need that, that movement in order for me to make any money. But that, these days the movement is very, very small. So instead, what I've been focusing on is trying to determine, where do I think thing is going to be, at least, for another couple hours. I need this to hold consistently below a certain point or above a certain point for, a couple hours. Once I determine that, I just sell on the opposite side.
Mhm. Mhm.
So sell your PCS. The profit target used to be 70, 80 cents. Now it's more like 45 or 50 cents.
Mm.
Yeah.
Okay.
I
Yeah,
haven't,
that's kind of my target, 50
I
cents.
haven't, yep. I haven't increased my position size because that increases the risk tremendously.
Mhm.
So I'm still doing 3 to 5 strikes. Sometimes, even when I feel, a little uneasy, and then I would normally go for 1 strike, I just pass on it and decide it's not worth the risk. So only when I have, good size, bit of confidence there that it's going to work the way I think it is, then I will go for 3 to 5 spreads. And then
You,
I'd rather do it even several times a day.
you mean when you say 3 to 5 spreads, you mean away from current price?
No, 3 to 5 spreads, as in, sell 3 spreads or sell 5 spreads.
Oh, okay. Oh, like
Yeah,
like a contract.
yeah, yeah.
Okay,
Equivalent
sorry.
of, yeah.
I'm
So
just trying to get used to all the different terms. There's so many terms.
yeah, I don't sell more than for contracts. I usually will do about 3.
Okay.
Yeah, not I don't do 10, 15 anymore. No, just about 3 is good enough, and that's just because of the risk. I've discovered that you know you make a little bit money, you put out a little bit of risk. It's much safer than trying to hit the home run every single time.
Right. Right. So when you said 3 to 5 spreads, you mean like a 43.10 and a 43.20? Like,
Let's take the example that you have, the 43.10, 43.15, right?
yeah.
Okay, so that's, you can do a 1 lot. So if you collect 85 cents, uh I'll just do 3 of them at the same time.
Oh, okay, okay, okay,
Yeah,
okay.
I'm talking about the position size, the quantity of
Okay,
when,
quantity.
yeah,
Sorry, I was just
yeah,
trying to make sure I understood what you meant. Yes, okay, the
yeah,
quantity. Yes.
yeah. So three lot or 5 lot. Yeah, if I'm feeling uneasy enough that I want to go for one lot, then the answer would be 0.
If you're not certain enough to do 3, then do 0.
Then 0. And the reason is, it means that I don't have enough confidence on it. Why am I even risking it?
Right, right.
Yeah. So just don't do it. Just wait for the best, a better opportunity.
Right, 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 right.
Yeah.
Um, yeah, so many things going on in my head. I'm trying to refine my trade plan so I have at least something I can count on for at least a month or so.
Mhm. Yeah,
And
sell spreads at this time, until next month when things are going to be, a bit different. Then the end of the year comes. But you would inside of your plan, you need the short to medium term trading plan and then the longer term trading plan. So the longer term is where if the prices continue to go down, then you know that it's buying season for the longer term, equity and the leaps basically, right? And so you want those long-term trades inside of your portfolio. You want to do that with profits that you've already made, not money coming from your savings or anything like that.
Mhm.
It needs to be money that you've already made, and that way you're protecting that profit, that capital.
Mm.
Yeah.
Me, I've been in sim for I think since like March of this year, and I literally just last month started trading live. So I'm
Mhm.
still new, trying to build up a small account.
Mhm.
So I haven't reached a spot where I can do the long-term part of the
Yeah.
plan. I'm still
Yeah. Okay. Yeah. Take your time. You've got more time than money right now. So
yeah.
that's the way I would look at it and say you need more experience. Most people need about a year to 2 years just to see how the market works. Because even though we've seen bull market in the last few years, we've seen a bear market, and now just recently we've seen a market that has no direction, basically. Yeah.
Oh,
So you,
yeah, how
so
do
so
you describe
you, as far as the S&P going in one consistent direction, over several weeks.
it? Mm,
Yeah.
okay.
So many things these days that are coming out. We've got new things we haven't seen before, like COVID. We've got AI. We've got wars. We've got, pretty soon there's going to be something else that's going to shake the market. Got
Mhm.
interest rates. Yeah, all of the above. So
So many things to think about all at the same time.
yep. I mean,
Yeah.
things we haven't seen before, right? Every
Yeah.
time it's something new. Otherwise, we would know exactly what to do.
Mm.
Yeah.
There's a new war. Israel declared war on Hamas. So
Oh
What?
yeah.
Oh my
Uh,
goodness.
yeah. And that's going to alter somehow. We might think that that's too far away from us, but no. Uh, Obviously, we have some interest in that region, uh, and that's huge. Those are two countries. That's one country that is always on the spotlight, always on the spotlight.
Hmm.
So yeah.
hey Eddie, what are your thoughts on the opening range breakout strategy?
I think it works. It works on and off. It's not always correct. So the opening range breakout is one where we watch the 15-minute candles, right? And
Right.
we're looking to see if the breakout is to the top, then what you do is you sell on the opposite side. So the bottom, you sell a PCS. And conversely, if the breakout is to the bottom, then you're going to be doing a CCS above the first candle. It's usually a call or a put credit spread that is very, very close, in my opinion, to the fire. Very, very close. By close, I mean that sometimes you're within 15, 20 points of the current price, which in my opinion is very, very close. But these days you have to kind of go that close to get any sort of decent premium. So it's a risky trade. It depends on the continued action, that particular movement, uh, happening so that your premium decays very quickly. But otherwise, I've tested the opening range breakout. I've seen others do it. It does work, but I've also seen it fail. I've also seen it fail. So I know it works, but not just like everything else. It's not 100%. The win rate there is probably 70 or 80%, which is, pretty good, but it's that 30% that kills you. So what you have to do with, just like with any strategy, you do have to have a stop loss. And the stop loss can be quite painful on an ORB trade because you're looking for premiums that are sometimes $1.25, give or take. And if you do a 1x on those and you have a 5 lot, then that could translate to what? $1.25 times 5. What is that? 625, give or take. Yeah. I think my math is wrong. Times 5. Yeah, 625. So you'd be losing about 6.25 if you had a 5 lot and you had a 1x stop loss. So,
Yeah.
have you tried those?
A couple of times, but
Yeah.
like you said, it's sometimes it works, sometimes it doesn't. But I just wanted to know, if you were to do that on a more consistent basis, and you just said it a few minutes ago that you think it's about a 70-80%
Yeah.
win rate. I mean, so I guess that's not bad. I mean,
Yeah, it's not too bad. There are people who just do that. So the thing is, there are so many strategies, especially with S&P 500. So what you want to do is whichever strategy that you pick, and you're winning, you want to at least try it out consistently, maybe a month or 2 months or even 3 months, and see how it's going. And then it will give you that win percentage or loss percentage, and you decide, is this good enough? For instance, on the days that you lose, is it wiping out 1 week worth of gains? If it is, then maybe not so good, right?
Yeah.
Yeah. Because why work for a whole week, make your 2,000-3,000, and then in one day you give it all back. So the trick is, consistently what we've said is your stop or your risk should never be more than what your account can handle. In my opinion, handling here can be described a few ways. I think handling should be, if I can make back the amount that I lost in one trade, then it's a healthy risk. If it's going to take me 2, 3, 4, 5 trades just to get back to level 0, break even, that's not a good risk. So even with an open range breakout trade, you still want to be very, very careful. The 1x, unfortunately, is about as good as you can risk. But there's some people who don't even let it go to 1x. I'm one of them, because I don't think I should lose so much such that there's no reason to let it go all the way to 1x. That's basically what I do. So I'm risk averse.
Yeah, I agree. So you'll just get half of that, and then if it approaches half of that 1x, then you just go ahead and pop out of there.
I just get out. Yeah. I just get out. So if you do these every day, then you do have to have PDT proof your account. And the best way is to get the same consistent amount of your position size needs to be consistent if you're going to do these for a period of time, so that you can gauge the results. So you can either start with 1 or 2 or 3 and do the same number throughout, and the same rules that are applying. If your stop loss is 1x or it's a half x, then that's your call there. And if you're looking for, say, 35 cents, 40 cents, which never, it used to be unreasonable to go for that amount of money, that low amount of money. Now it is actually more reasonable to even just want 35 to 50 cents. Yeah.
Yeah.
So problem is, when you're going for 35 to 50, you're tempted to go 5 lot, 10 lot. Now you've increased your risk about 10 times. So grow slowly, grow consistently would be the name of the game. So yeah. Good deal. Well, guys, I am going to get out of here right now. So we are going to see you in a couple weeks.
Thanks for all your help, Eddie, and have a wonderful birthday.
Well, thank you. Thank you very much. We'll see you soon.
Enjoy.
Thank you.
All right.
All right.
Bye-bye.
Bye-bye.
All right. Bye-bye.